Welcome to the Second Bite podcast, where we talk with top entrepreneurs and CEOs about creating valuable companies through creative transactions. Now, let's get started with the show.
Welcome to the Second Bite podcast, and welcome to my guest, Raj Ramanan. And Raj, it's great to have you here.
Likewise. Thank you. Long time coming. Thank you so much for having me on.
I'm excited to have you. We've got a bunch of stuff that I want to unpack. And before we jump in, I want to thank our folks. We have a sponsor, the good people at Fiscal Advocate. I don't know if you're familiar with them, Raj, but they help agency founders take their financial data, turn it into a dashboard that they can see, and then make good decisions from and on from there. John Morris built an agency himself and sold it and made a bunch, and he's building a great business here. So thanks to our friends at Fiscal Advocate. All right. Raj is the CEO of Herringbone Digital, which is a new venture. We're going to start to unpack this some. It is backed by Trinity Hunt, a well-known private equity group. Tell me just a little bit about Herringbone,
Sure.
What you do and who you do it for. And then I want to get into you, how you got there, what you're doing, how the world's working, on from there.
No, that sounds great. So the quick pitch on Herringbone Digital. So we're a platform executing an M&A roll-up or a build and buy strategy in local digital marketing services. What that means in practice is we're looking to partner with and invest in the absolute best marketing agencies and local digital advertising agencies that are focused on particular verticals, pulling them together, supporting their own growth initiatives to kind of unleash them and unleash growth in the world. So
I want to unpack a couple of things here, and I'd like to put you in context. So first of all, Trinity Hunt.
Yes.
Trinity Hunt's always been on the founder-friendly list. They're also on the HEC list for lower middle market return to investors for private equity groups. As I envision it, they sit around the conference room and say, here's our thesis. And our thesis is local marketing in these verticals, but we got to go find somebody to run it. So maybe you can comment on that. But for you, you're an ex-KKR guy. You were COO at Scorpion, which is a big ship. You were CEO of a logistics company, which isn't your history. How did they find you? How did they drag you over? Why did you decide to make the move? Riff on that for a little bit, if you will.
Yeah, for sure. Great question. I mean, first of all, Trinity Hunt Partners, THP, really is a very unique and a very special fund. A lot of what you said, they specialize in build and buys or roll-ups of tech-enabled services businesses and have had multiple hits in marketing, primarily enterprise digital marketing. Through that process, they kind of learned about the local space and had a conviction thesis and launched a platform in this space. And yeah, the returns have been stellar across the last couple of funds and across all of their funds, but the last couple of funds that were more dedicated to build and buy, and certainly build and buys in this sector, they've done really, really well. So how they found me, I was CEO of a tech-enabled logistics company that was actually going pretty well. I built a great team, raised their Series C, hit kind of record revenue and record growth, having a lot of fun. But John Martin, who is a principal that is on our board and kind of leading the investment in Herringbone, was introduced to me through Daniel Street, who's a good friend. We co-founded a startup together many years ago. He was CEO of Scorpion when I joined. And so he was on the board of one of their enterprise marketing companies. When they sort of launched the local digital advertising platform, he recommended me. So John came out to Salt Lake City. We had this great lunch. And frankly, it's not a little too good to be true. As you mentioned, the sort of big private equity experience that I've had, I was very skeptical. And ultimately, John just sort of took away reasons to say no. And it really was the perfect storm where I still feel this way from the day I signed my offer to now, that it's kind of a once in a lifetime chance. This is my shot. Great investors, great board, subject matter experts around me. I just feel very lucky and very fortunate to be captaining this ship.
So when you show up, essentially you got a whiteboard. How do you start to populate that with, here's the vertical we're going to do, or we got to start here, or how did that happen?
Yeah. So, I'm going to age myself here, but Daniel and I did a startup. It was kind of a local discovery app way back in 2008. Angel money, VC money, moved to San Francisco, kind of that whole journey. And so we've been obsessed with local since then and have tried to do this roll-up strategy multiple times, right? At Nexstar, at Scorpion, and things like that. And so we already had a strong perspective of what the right way to do this is. In local agencies, especially kind of founder-led agencies, growth is hard. It's not like enterprise. So the amount of effort it takes and the amount of money it takes to land a new customer relative to what that customer is able to pay makes scaling really difficult, especially as you get bigger. And so acquiring great agencies and great founders can be a way to like accelerate growth in a very accretive fashion while preserving the relationship between a strong local brand and its customers. So this strategy has kind of been debated and rattling around, 10 plus years in different forms and fashions that Daniel and I wanted to do. And we finally found a partner that had the same conviction we did. Legal, we just know legal really well. Across multiple stints, and it tends to be one of the largest spending categories in local. Dental, we found more fragmented, so more wide open in terms of being able to build a winning platform potentially faster. So those two as kind of our starting point just made a ton of sense.
How do you actually turn that into something? First of all, what are the biggest risks to not just acquiring one, but stacking on top of that? And have you identified a few key characteristics, personality traits, whatever it might be, to those initial acquisitions because they're so important to the whole platform?
No, you nailed it. And I'd say this is a combination of just really good, really open dialogue and debate with the board, and just some hard-won wisdom from having been in the industry for a long time. So I'll kind of answer the second question first. We are very careful about who we partner with and who we invest in. And so a big part of the thesis is in any new vertical and the segments within that vertical, we need to partner with the best. Not just the biggest name, but like the best actor, the highest integrity founder. Let's go find the best and let's be aggressive about paying for that asset and sort of like partnering with them and making sure we go get them. And so I'd say the initial couple acquisitions took a while because we were picking, we were having a lot of meetings, and the best companies are never for sale. So we were convincing founders to kind of take a risk with us. Once that happened, it's like the seas parted, where once word gets around that like some of the strongest assets in each vertical has decided to, join hands with us, then other great founders hear about this. I'm like, oh, there's something here. This is different. One of the biggest challenges is private equity has a bad reputation in all circles, but especially in this circle. And so I always say it's kind of like dating. Like, you've been hurt before. How do I convince you that I'm different, right? And words are cheap. And I think what's really differentiated is track record in the space. Now that we have a few deals or a couple of deals under the tent, those founders being able to say like, hey, my experience has actually been really good. And what they said they do is actually how they treat us and things like that. And then just the foundation of THP's model, which is just very transparent, very fair, and emphasizing aligned incentives. And I can speak more about that, but it just keeps us all rowing in the same direction.
I know we always talk about integrating companies. And integrating companies, it has challenges, but I think it can get done. Integrating personalities might be tricky. And you want great entrepreneurs to stay on board. If you acquire a dental agency and then you acquire another agency that markets to dental, don't you get a little bit of the headbutting going on?
I'm not saying this will always be true, but we generally try not to buy directly competing assets. So we will have multiple companies in dental, multiple companies in legal, but they will each target a different segment. It won't be perfect. There might be some overlap, but that way we can keep each brand and each company and each founder pointed at what they do best. And then work with the founders to work together on things like cross-sell and potential operational integration.
And when you say different segments, do you mean size of client? Do you mean geography? Yeah.
Great. All of the above. What we're finding, and happy to have dissenting points of view, but what we're finding in dental, the way it looks this segment is sort of by specialty. general versus ortho versus perio versus endo, and then the DSO market. In legal, it looks to segment more by size of client. Are you kind of a startup legal agency, a mid-sized legal agency, or a very large legal agency? Law firm. And then the agencies tend to serve a particular segment.
But you just made an announcement for your first legal acquisition.
Correct.
Tell me about that.
Yeah, super happy and super excited to share it here that we invested in and partnered with Hennessy Digital and Jason Hennessy, amazing founder.
Leaders in the space, for sure.
Exactly. Thought leader. I'm trying to think of words that aren't cliched because it undersells his impact and just how much he's respected, certainly by clients, by SEO experts, but just other agency founders that look up to him, that he's like mentored. He's just such a force for good. And I got to meet him during the diligence process. We had breakfast together and it was just like super fun, engaging conversation. Just a really, really good guy who cares deeply about his clients and about his team, wants to do the right thing. And once you hear him speak about why he did this deal, it's just like, he tells the story better than I do. Like, it's all the reasons you want a founder to join, it's amazing. It's just a really nice fit and a really nice partnership and a great business. I want to emphasize that.
Yeah, it is. And I know Jason as well. And I know him to be sincere and all the great things you would want. However, there are some people out there that just tell a good story, maybe with a little bit less sincerity. Is there any way to really kind of figure that out before you close?
100%. So, I kind of alluded to this. This is Trinity Hunt, but it's also me. It's also my philosophy. It's like, you need to deeply, deeply know the person that you're going to work with for the next 5 to 7 years. And so the time we spent getting to know Jason and his management team, in-person meetings, dinners, multiple phone calls, it convinced me that there's so much depth there. Like, I don't think you can be that successful for that long and have clients love you. And like, almost to a person, not almost, everyone we talk to in the industry, all of our industry contacts, glowing things to say about him in terms of like character, integrity, follow through. And then you go through, the spreadsheet work. So retention, customer NPS, customer growth, like the metrics are off the chart. So you kind of combine what we know about the person and sort of a gut sense of how you feel about the person and the team and the quality of the team that he's built, and combine that with the financial picture and all the multi-year analysis and things my team are really good at and the Trinity Hunt folks are good at. It was like, this is a slam dunk. This is the deal to start with. When
you look at Hennessy, do you say, okay, here's where they fit in the ecosystem. Let's try to round out pieces around it?
Yeah.
Or are you just opportunistic and they either fit or they don't fit?
No, we're definitely not opportunistic. We've been really lucky. So certainly with the news of Hennessy Digital, but even before, as we were kind of laying out our vision, it's really resonated in the marketplace to the point where 300 or 400 companies are in pipeline, 50 very interesting conversations with companies that we're very excited about. Like, it's going so much faster than any of us expected that we're actually very intentional. Like, here's our vision. And Jason's a big part of this. Here's our vision in legal. Jason, you are this. What are the right companies to put around that to build the ideal legal stack? Something that's important to me is like, I don't want this to just be a financial play. Like, I want to build the best platform for owners and founders of local services businesses to kind of unleash their potential and maximize their impact on the world. That might sound a little cheesy, but it's super important to me. I mean, I founded a startup. Anyone who starts a business, it's an act of heroism. You're putting yourself out there. And just to be a part of that journey, like, I see you. This is a lonely job. You built something out of nothing. You overcame doubters and all the odds. I want to support you in that. So it means, yes, we're going to surround Jason with the best founders and complementary segments, but it also means we're looking beyond just marketing agencies into coaching businesses, consulting businesses, intake, AI-enabled plays, because what are all the problems we can solve for the owner is really the lens that we're looking at the market.
And so if I was the founder of a digital marketing shop focused on legal, how do you manage when you tell, because I think probably all the dental guys know the other dental guys and the legal guys and the medical guys. How do you know when to introduce or get feedback or get assessment from one to the other and without making everybody nervous?
Yeah, no, 100%. We definitely, the folks that we talked to about Jason were not other founders per se. They were like other people at other companies that we trust, but not necessarily founders. Because you're right, it's a very, very small ecosystem, and it would be unfair to a founder to like leak this news before they're ready. But now that Jason is on the inside, we're bouncing everything off of him. If I meet a legal founder, my first call or email is to Jason, and he's got just a great read. First of all, he deeply understands and has bought into our strategy, but he's got just a great read about the person and the business and the risks, the opportunities, and sort of where it fits in the stack. It's the ultimate superpower. It's allowing us to go faster and spend more time on the right deals.
And so when you do a transaction, right, you close a deal, what do you tell founders that's going to change? And what do most founders struggle with most as a change?
Again, these are such great and relevant questions. It's something we talk a lot about. Like, some founders ask us, some founders like, what's the one question I should be asking? It's always that. Like, what changes on Monday? You're going to celebrate. The wire transfer is going to hit your account. You're going to have the best weekend of your life. Then, you get through the hangover and it's Monday morning and you're like, oh my God, what have I just done? I started a business because I didn't want a boss, and now I have to talk to this Raj guy. So without exaggeration, I'm also someone that never really wanted a boss. I really try to be the manager I always wish I had. And so usually what changes for them is almost nothing. So we work with them and their finance team to help them with financial reporting monthly and quarterly. We help them with sort of board presentation and governance. Beyond that, we align on targets, financial targets, and kind of goals for the next quarter and the next year. And so I do have a 30-minute one-on-one with each of the founders, but it's very much what's going on? Are you on pace? What can I help you with? The foundation is these people have built unbelievable businesses over 3, 5, 10, 15 years. I'm going to trust them and support them. And I really think that's the job of a great leader. Like, set the vision, set the strategy, bring resources, drive alignment, remove roadblocks, and get the hell out of the way. Like, they don't need to be spending their time on a Zoom with me. They need to be continuing to run their incredible business.
Let's go before deal close and talk about diligence, because that's a grind oftentimes.
Yeah.
What do you find, is the biggest challenge for guys going through diligence? And if you could make a suggestion to be more successful during diligence,
great.
What would that be?
Great questions again. Let me take a little detour. So when I sold my startup, there were kind of two suitors, and one we really fell in love with. I was young and immature about this. My team was all really young engineers. And so they took us through a brutal diligence process, code reviews, interviews. While we were doing the interviews at their beautiful offices, the free lunch, the celebrity founder happened to walk by. I mean, this was the 3-month where we just stopped shipping product and stopped growing user count. And the final offer was less than 10% of the opening offer. I was like practically in tears, because like a lot of my friends, a lot of my buddies between 20 and 30 had invested. And I was like, I just wasted 90 days that I don't have, cash is tight. And I just made a promise. I will never treat a founder that way. Like, what you're doing is that important and that big a deal. If it's not real, I'm not going to waste your time. I believe in private equity or in sort of M&A for local marketing agencies, we have the leanest process out there. That doesn't mean it's easy, but we do everything we can to minimize distraction. We aim to close in 60 days. Our average is probably around 70 or 75. There are kind of two painful or periods where we need more from the founders. One is quality of earnings, where we essentially have an accountant to sort of verify that the numbers are the numbers. The other is we really care about customer relationships, and whether that's an NPS or customer interviews through a third party, that's really important. We also have a very high rate of LOI to close. The numbers you get in the LOI are the numbers, we really try to close at. And so given that high probability that we're going to get to a transaction. It's worth the investment, but we try to make it as painless as possible.
What would you suggest to one of the things that we always get to is bring as many people under the tent as possible as early as you're comfortable with.
Yeah.
And splice up the work. So because you have to keep numbers rolling, right?
Correct.
Because if numbers keep rolling and keep growing, your likelihood to close is dramatically higher.
Correct. I think that's good advice. I mean, there is such a thing as like too many cooks in the kitchen, but certainly like give a work stream to a person, right? Your finance person should be probably running the quality of earnings process. Your either head of revenue or head of customer success should be working on the customer reach outs, or the founder. So I do think having a tight but adequately staffed team that's under the tent does make it go a lot faster. And one like obvious one is like it does go faster and smoother with an advisor or banker, like someone in your corner. Cause like, yeah. And I know I'm talking to you, and I promise I'm not playing to the audience. We've seen it. Our time to close on a no advisor deal versus an advisor deal is dramatically different. And it's not the mechanics, the work. It's more there's just someone in your corner that says, this is weird. Go push on this or talk to a lawyer. Or this feels weird because you've never done it before, but this is normal. From our side, it makes our process faster because the bank or advisor speaks our language. Put the financials in this format, show retention in this way, and we can just fly through it that way.
Yep. So as we sit here now, you've got 2 closed, a couple more coming,
yeah,
and a pretty full pipeline.
7 LOIs that we're waiting on, and yeah, just a pipeline that. Again, I cannot believe how fast we've gone, and genuinely excited. Some of these are just unbelievable founders and teams that I feel so lucky to have met.
There's a lead time in our business. So Jane, the things that you're seeing now were being discussed and negotiated in January, February. So let's assume somebody's listening to this in the summer or Q4 of 25. What do you think you'll be looking to add to the team and to Herringbone at that point?
Great question. I mean, some of it's sort of path dependent. It depends on, do I get the exact companies that I'm most excited about? But what we'd be looking to do is kind of finish the stack in legal and dental. So like cover each of those dental segments that I mentioned, make sure we're covering each of the specialty services and DSO. And then in legal, same thing, make sure we're kind of covering the segments sort of mid-size and small. And then we'd have the luxury of looking at these ancillary services, which I don't mean dismissively, but like, is it coaching? Is it intake? Is it operational support? I really want to sort of close the loop, because if you have really great intake and really great appointment setting and dental, really great insurance verification, and you're filling chairs, it actually makes the marketing more effective. And so it's an important part of the stack that I don't want to neglect. So it'll be kind of a combination of depth, like let's close out, let's have a full stack solution, with breadth, where unbelievably and kind of by accident, we have an unbelievable pipeline in home services. And so we're going to have a decision to make about how quickly do we go approach that. And then I continue to be super excited about elective med or fee-for-service med. Those are things like, chiro and optometrists and things like that, cosmetic. There's some amazing pure play agencies that need help driving growth and things like that. So we're going to have kind of the luxury of 2 different options. But for me, I'm kind of going to prioritize breadth and then think about the next vertical to stand up.
Super helpful. That is terrific. It'll be great to watch you guys execute along those lines. It'd be great to compare notes maybe in a year and see what kind of progress you've made and who's joined the team. So all of that, Raj, was a great share, and thank you for that. I wish you the best of luck going forward. Thank you to our friends at Fiscal Advocate and the sponsorship of the show. Raj, again, thank you. Best of luck. And thanks for sharing with us.
Really appreciate it. Thank you so much for the opportunity.
Thanks for listening to the Second Bite podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.